Introduction. Most traders step into the market armed with charts, strategies, and indicators. They spend months, even years, trying to crack the perfect system. But here's the truth most people never realize. Trading success doesn't come from strategies alone. It comes from mindset. Think about it. The markets are filled with traders using the same technical tools, the same price data, even the same indicators. Yet, why do only a tiny fraction of them become consistently profitable? It's not knowledge that separates the winners from the losers. It's psychology. Let me tell you a quick story. There was once a trader, brilliant, well-educated, deeply skilled in technical analysis. He could predict short-term market moves with uncanny accuracy. On paper, he had every advantage. But when real money was on the line, fear and greed controlled his every move. He held on to losing trades, hoping they'd turn around. He doubled down when he should have cut his losses. And when he finally had a winning streak, he gave it all back because he couldn't stop overtrading. His downfall wasn't lack of skill, it wasn't lack of knowledge, it was lack of mindset. Now, compare that to legendary traders, the ones who last decades in this game. They don't trade because they're chasing excitement. They don't gamble because they need to feel alive. They operate with discipline, patience, and clarity. They treat trading like a business, not a casino. That's the difference between gamblers and masters. And that's what this audiobook is all about. Over the next chapters, you'll discover 15 rare practical mindsets that the world's most successful traders live by. These aren't motivational clichés, they're battle-tested mental frameworks that help you survive losses, control emotions, and thrive in markets that chew most people up. By the time you finish, you'll not only understand these mindsets, you'll know how to make them your own. Because at the end of the day, your greatest edge isn't a strategy, it isn't a secret indicator, it isn't a signal service. Your greatest edge is you. So let's begin. Chapter 1. The Probability Thinker. When most people step into trading, they come in with the wrong expectation. Certainty. They want to know for sure if the market will go up or down. They want guarantees. They want 100% winning trades. But here's the truth. Certainty doesn't exist in trading. Legendary traders don't play the game of being right or wrong. They play the game of probabilities. They don't ask, will this trade win? Instead, they ask, if I took this trade 100 times, would I come out ahead? That shift in thinking is everything. The casino analogy. Imagine a casino. Every single day, thousands of gamblers walk through the doors. Some walk away with winnings. Some even hit jackpots. But at the end of the year, who always comes out ahead? The casino. Why? Because the casino doesn't chase certainty. It doesn't care if you win or lose tonight. It plays the long game, built on probability. The house edge might be small, 2%, 3%, maybe 5%, but over thousands of bets, that edge guarantees profits. Now here's the key. As a trader, you must become the casino, not the gambler. Gamblers chase being right. They think the next spin of the roulette wheel, the next trade, will make them rich. Traders who think like gamblers get crushed. Legendary traders, on the other hand, think in terms of probabilities. They know they'll take losses. They know some trades won't work out. But they don't care about being right on one trade. They care about being profitable over many trades. The gambler's fallacy. There's a dangerous psychological trap called the gambler's fallacy. It's the belief that after a string of losses, a win is due. For example, if a coin flips heads 5 times in a row, People think tails must be next. But the truth? Each flip is still 50-50. In trading, this fallacy destroys accounts. A trader takes 5 losing trades in a row and convinces themselves the 6th one must work. So they increase their risk, double their position, and boom, the 6th trade loses 2. One bad decision wipes them out. Legendary traders don't fall for this. They understand probabilities don't guarantee outcomes on a single trade. They spread risk across time, across trades, across probabilities. Action step. Shift from winning to risk-reward thinking. So how do you develop the probability mindset? Start by forgetting about winning and losing. Instead, think in terms of risk versus reward. For example, if you risk $100, but the potential reward is $300, you don't need to be right all the time. Even if you're right only 40% of the time, you'll come out ahead in the long run. This is the exact opposite of how most losing traders think. They risk $300 to win $100 just to feel like they're right more often. But that math guarantees eventual failure. Instead, legendary traders flip the script. They accept being wrong more often as long as the math favors them. Key takeaway. Legendary traders are probability thinkers. They don't chase certainty. They don't fall into the gambler's trap. They focus on the long game, risk versus reward, probabilities versus outcomes. Your mission is simple. Stop thinking like a gambler. Start thinking like the house. Because in the end, trading isn't about being right on this trade. It's about being profitable across thousands. Chapter 2. The Loss-Acceptor's Edge. There's a brutal truth in trading that most people don't want to hear. Losses are inevitable. No matter how smart you are, no matter how perfect your analysis looks, no matter how confident you feel, losses will happen. And the difference between a professional trader and an amateur isn't whether they lose, but how they handle losing. Legendary traders don't just accept losses, they embrace them as part of the game. They know losses are the cost of doing business. But here's the edge. They cut those losses fast, while amateurs let them grow until they blow up. Why do traders hate losing? The human mind hates being wrong. It's wired into our psychology. When we take a losing trade, it feels like a personal failure. Ego kicks in. Pride whispers, just hold a little longer, it'll come back. Don't admit defeat yet. This is how traders turn a small paper cut into a life-threatening wound. What should have been a $100 loss snowballs into $1,000, then $10,000, until the account is gone. Think about this. If you can't take small losses, the market will eventually force-feed you a massive one. That's why legendary traders do the opposite. They don't argue with the market. They don't hold on to hope. They cut losses quickly and move on to the next opportunity. Story: the ego trap. Let me share a story. There was a trader who entered a position on a stock he believed in. His research looked solid. His conviction was strong. But the market went the other way. Instead of cutting the loss at 2% or 3%, he told himself, "It'll come back. I just need to be patient." The stock fell another 5%. His ego screamed louder, "If I sell now, I'll look stupid. I'll prove I was right." He held on. Soon he was down 20%, then 30%. By the time he finally gave up, he had lost half of his account on one single trade. That's the ego trap, choosing to protect your pride instead of your capital. Meanwhile, legendary traders would have exited at -2% and moved on to the next opportunity. Their secret? They never let one trade destroy them. The trader's golden rule. Here's a principle to burn into your mind. Your number one job as a trader is not to make money. It's to protect your capital. If you protect your capital, you'll always have another chance. If you blow it up, the game is over. Practical hack: preset stop loss. So how do you make loss acceptance practical? Simple. Decide your exit before you enter. Before placing any trade, ask yourself, where is my stop loss? How much am I willing to risk on this trade? Then set that stop loss and commit to it. No second guessing, no moving it lower, no bargaining with the market. This one simple habit turns emotional, ego-driven decisions into mechanical, professional ones. It's what separates the disciplined trader from the reckless gambler. Key takeaway: losses are not your enemy. They are your tuition. Every trader pays them. The only question is whether you'll pay small fees or massive debts. Legendary traders win not because they never lose, but because they lose small and win big. So remember, amateurs protect their ego. Professionals protect their capital. Cut losses fast, accept them with discipline, and live to fight another day. Chapter 3: The Discipline First Principle. If you asked me to name the single greatest difference between a losing trader and a legendary trader, it wouldn't be intelligence, it wouldn't be technical skill, it wouldn't even be experience. It would be discipline. Great traders follow their rules, even when every emotion inside them is screaming to do the opposite. Discipline is the invisible bridge between strategy and success. Without it, no strategy, no matter how brilliant, will ever work. Why discipline beats emotion? Here's the truth about trading. The market is designed to test your emotions. Fear will whisper, "Get out too early." Greed will whisper, "Stay in too long." Impulse will scream, "Take just one more trade." And yet, legendary traders act like soldiers on a mission. They follow their plan. They stick to their process. They don't let emotions hijack their decision-making. Discipline is what keeps them safe when the market turns wild. Story: The Rule Breaker's Lesson. There's a famous story of a young trader who had a strong trading system with proven results. But one day, the market moved fast, and he felt like this time was different. Instead of following his rules, he broke them. He doubled his position size. He ignored his stop loss. He thought, "I'll make back a month's profit in a single trade." You can guess what happened next. The market turned against him fast. What should have been a small loss turned into a devastating one. His account dropped by 30% in a single day, all because of one moment of broken discipline. That's the thing about rules. You only need to break them once for the market to punish you. Why rituals and checklists matter. Legendary traders don't rely on willpower alone. They know emotions are powerful, so they build rituals and checklists to protect themselves from impulsive decisions. Think of it like a pilot flying a plane. No matter how many times they've flown, they still run through a pre-flight checklist. Why? Because human memory and emotions can't be trusted when the stakes are high. Trading is no different. Your daily routine, your pre-trade ritual, your written checklist, these are your shields against emotional sabotage. Practical action step. Build a trading routine checklist. Here's how to start. Pre-market prep. Check economic calendar. Review overnight market news. Identify key support-resistance levels. Before entering a trade, what's my risk per trade? Where is my stop loss? What's my target reward? Does this trade fit my strategy? After each trade, record results in trading journal. Note emotions felt during the trade. Review, did I follow my rules? This simple checklist builds consistency, and consistency builds confidence. Key takeaway. Legendary traders are not superheroes. They feel fear, they feel greed, they feel the same emotional pressure you do. The difference is they don't let emotions dictate their actions. They let discipline guide them. Remember this, discipline is the bridge between your strategy and your success. Without it, you have nothing. With it, you can survive anything. So from this moment forward, write down your rules, create your checklist, make discipline your greatest trading edge.
Chapter 4. The Marathon Mindset. Most traders come into the market thinking it's a sprint. They want fast wins, overnight success, and instant wealth. They're obsessed with today's trade, this week's profit, this month's returns. But here's the reality. Trading is not a sprint. It's a marathon. The goal isn't to win big today. It's to still be standing, profitable, and growing 10 years from now. Legendary traders think in decades, not days. They understand that small, consistent wins, stacked over time, beat the lottery-style all-or-nothing approach that wipes out most accounts. The power of slow and steady. Think of a professional marathon runner. They don't explode out of the gate at full speed. They pace themselves. They conserve energy. They know the real victory isn't in the first mile, but in finishing strong after mile 26. Trading works the same way. Amateurs sprint. They risk too much. They chase hot tips. They gamble for quick glory. And just like a sprinter who burns out halfway through, they run out of capital long before the finish line. Professionals, on the other hand, pace themselves. They risk small, grow steadily, and let time work for them. The compounding secret. Here's where the magic happens. Compounding is the quiet force that turns small, consistent wins into massive long-term success. It doesn't look impressive at first. Making 1% a week feels tiny. But do that consistently, and in a few years, your account can multiply many times over. The most famous example, Warren Buffett. He didn't become one of the richest men in the world by hitting lottery trades. He did it by compounding, steadily, year after year, decade after decade. His edge wasn't chasing big wins. It was never interrupting the compounding machine. Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." That's the marathon mindset in one sentence. Story: the sprint versus the marathon. Let me tell you about two traders. Trader A wanted fast money. He risked big, doubled his account in a month, and felt unstoppable. But the next month, one bad streak wiped it all out. He sprinted, then crashed. Trader B moved slower. He risked small, followed discipline, and compounded little gains. His progress seemed boring at first, 5% this month, 3% the next. But after a year, he had grown his account steadily, without blowing up once. After 5 years, his account was far ahead of Trader A's and still growing. Guess who survived? Guess who thrived? Practical action step. Think in years, not days. Here's how to apply the marathon mindset. Lower your expectations. Stop chasing home runs. Aim for consistent singles. Focus on risk per trade. A marathoner conserves energy. You must conserve capital. Track monthly and yearly growth. Judge yourself not by today's win, but by your long-term curve. Protect compounding. One blown account kills compounding. Guard your capital above all. Key takeaway. The market rewards patience. Legendary traders know success isn't built in a week or a month. It's built over years of discipline, small wins, and compounding growth. So stop sprinting. Slow down. Build steadily. Think like a marathoner, and the market will pay you for decades.
Chapter 5. The Adaptive Chameleon. If there's one constant in the markets, it's this: things will always change. The strategies that worked yesterday may not work tomorrow. The patterns that seemed reliable last year may fail this year. Entire market cycles come and go, wiping out traders who refuse to evolve. Legendary traders understand this. They don't marry their strategies. They don't cling to one method forever. Instead, they adapt, they transform, they reinvent themselves when conditions shift. They are chameleons, always adjusting to survive and thrive. The ever-changing market. Think of the market like the ocean. Some days it's calm, some days it's stormy, and sometimes it's a full-blown hurricane. A sailor who insists on using the same sails in every condition won't last long. But the one who adjusts, changing sails, reading the winds, adapting to the tide, reaches the destination safely. Trading works the same way. If you keep forcing yesterday's strategy on today's market, you'll get wrecked. But if you adapt, you'll survive any storm. Story: The trader who refused to change. There's a famous story of a trader who mastered a particular setup in a bull market. For years, he made consistent profits. But when the market shifted into a sideways chop, his system stopped working. Instead of adapting, he doubled down. He told himself, "It worked before, it will work again. I just need to wait it out." But the conditions had changed. Month after month, his losses piled up. Eventually, he blew up, not because his system was bad, but because he refused to evolve. Meanwhile, traders who recognized the shift quickly adjusted, reducing risk, trying new setups, even sitting in cash until clarity returned. They survived. He didn't. The chameleon principle. Legendary traders reinvent themselves constantly. When volatility is high, they adjust their risk and trade smaller. When volume dries up, they scale back and wait for better opportunities. When a strategy stops working, they don't force it, they refine it or replace it. They treat trading like a living organism. If it stops adapting, it dies. Practical action step. Quarterly strategy audit. Here's how you can build adaptability into your trading. Every quarter, review your trades. Look at your last 3 months. What worked? What failed? Check market conditions. Was it trending, sideways, volatile, or calm? How did your strategy respond? Refine or replace. If something no longer works, don't cling to it. Adjust position size, tweak entries, or explore new setups. Stay humble. The market doesn't owe you consistency. You must create it by evolving. Key takeaway: markets change, conditions shift, strategies rise and fall. Amateurs resist change and break. Professionals adapt and survive. Remember to be a chameleon. Reinvent yourself when the environment demands it. That's how you stay in the game, not just today, but for decades.
Chapter 6: The Waiting Game. Most traders think they always need to be in a trade. They believe if they're not clicking buttons, they're not making progress. But here's a truth that separates amateurs from legends. Do nothing is a position. Legendary traders know that patience often pays more than action. Sometimes the smartest move isn't to enter the market, it's to sit in cash, watch, and wait for the right setup. The trap of overtrading. Overtrading is one of the fastest ways traders destroy themselves. Why? Because when you chase constant action, you end up taking low-quality trades, and low-quality trades bleed accounts dry. Think about it. No one makes money just for being active. You only get paid for being right. If the market isn't offering you an edge, forcing trades is just gambling. Story: the trader who couldn't sit still. There was once a trader who believed the secret to success was constant activity. Every day, he felt the need to trade, even if the market was flat or messy. He told himself, "If I'm not in the market, I'm wasting time." But his impatience was costly. Small, unnecessary trades piled up into big losses. Ironically, his problem wasn't lack of knowledge, it was lack of restraint. Meanwhile, other traders sat on the sidelines waiting for high-probability opportunities. When the market finally aligned, they entered with confidence and made their profits, while he had already drained his account. The patience edge. Legendary traders embrace boredom. They know patience is a weapon. They understand the market doesn't pay you for activity, it pays you for waiting until the odds are in your favor. Think of a sniper. A sniper doesn't fire at every movement. He waits, he breathes, he holds discipline until the target is perfectly clear. Only then does he pull the trigger. Trading is the same. The market is full of noise, distractions, and traps. The disciplined trader ignores them and waits for the perfect shot. Practical action step: schedule no trade days. Here's how to apply the waiting game. Create rules for entry. Define exactly what conditions must exist before you trade. If those conditions aren't met, you don't act. Embrace cash as a position. Sitting out is not weakness, it's strategic defense. Schedule no trade days. Pick days where you intentionally don't trade. This trains your mind to be comfortable with waiting. Journal missed opportunities. If you skipped a trade, write why. Over time, you'll see the difference between disciplined waiting and fearful hesitation. Key takeaway: legendary traders don't measure success by how many trades they take. They measure success by the quality of their trades. Sometimes the most profitable decision is to do nothing at all. Remember, patience beats overtrading. Sitting in cash today could mean surviving long enough to capture the life-changing opportunity tomorrow.
Chapter 7: The Risk Manager's Rule. If there's one golden rule that separates amateurs from professionals, it's this: legendary traders care more about survival than profits. Because here's the truth: if you stay in the game, opportunities will always come. But if you blow up your account, the game is over. The silent killer: over-leverage. Most traders don't lose because of bad strategy. They lose because they risk too much on a single trade. One wrong move, one unexpected market swing, and years of hard work can disappear overnight. This isn't just theory, it happens all the time. Real story: the trader who blew up. A young trader once turned a small account into a fortune within a few months. He thought he was untouchable. Instead of risking 1 to 2% per trade, he was going all in, sometimes risking half his account. For a while, it worked. His balance grew fast. But then came the inevitable. One bad trade, amplified by leverage, wiped out nearly everything. He didn't lose because his strategy was wrong. He lost because his risk management was non-existent. This is the fate of countless traders who confuse luck with skill. The mindset shift. Legendary traders don't chase quick riches. They think like survivors. They see every trade not as an opportunity to get rich, but as a calculated risk where their number one job is capital preservation. Profits are important, yes, but they are meaningless if you can't protect your capital. Think of it this way: the market is like the ocean. You can't control the waves, but you can control the size of your boat. Risk management is the difference between staying afloat or drowning when the storm hits. Practical rule: the 1 to 2% principle. Here's the practical rule every legendary trader follows. Never risk more than 1 to 2% of your account on a single trade. If you have a $10,000 account, the maximum you should risk is $100 to $200 per trade. This ensures that even a string of losses won't knock you out of the game. By keeping risk small, you buy yourself something more valuable than profit, time, and survival. Action steps for risk discipline. Set position sizes before trading. Calculate how much you're willing to lose before you enter, not after. Use stop losses religiously. A stop loss isn't a weakness, it's a shield. Think in terms of risk, not profit. Before asking, how much can I make? Ask, how much can I lose and can I survive it? Track risk in your journal. Write down how much of your account you risked each trade. This builds accountability. Key takeaway. Legendary traders don't win because they take massive risks. They win because they control risk better than anyone else. Remember, your first job is survival. Profits come second. Because as long as you stay in the game, the opportunities never stop coming. Conclusion: becoming a legendary trader. You've just discovered 7 powerful trading mindsets that separate amateurs from legends. And here's the truth. It's not about finding the perfect strategy. It's about becoming the kind of person who can execute any strategy with discipline, patience, and resilience. The market will test you. It will tempt you. It will punish your weaknesses. But if you hold on to these principles, the probability thinker, the loss-acceptor, the disciplined trader, the patient chameleon, you will not only survive, you'll thrive. Trading is not a sprint, it's a lifelong game. And the traders who win are the ones who master their mind before they master the market. Your call to action. Now it's your turn. Don't just listen to this audiobook, apply it. Pick one mindset from this audiobook and put it into practice in your very next trading session. Start a trading journal today and track your discipline, emotions, and risk, not just profits. Revisit this audiobook whenever you feel yourself drifting and remind yourself mindset is your ultimate edge. If you found this valuable, share it with another trader who needs it. Because when more traders master their mind, fewer accounts get blown up. Remember, tools and strategies change, but the mind you bring to the market lasts forever. So step into the market like a professional, protect your capital like it's your lifeline, and build your trading legacy one smart decision at a time. Because now you're not just a trader, you're a legend in the making.